home prices in China fell by the most in 6 years in October, as critics warn a deeper correction is yet to come. The average price across 70 cities dropped 0.25% from the previous month, according to figures released by the National Bureau of Statistics on Monday. That was much larger than the 0.08% decline in September and the biggest monthly drop since 2015. It was the country's first real estate decline in 6 years, triggered largely by the Evergrande fiasco. Meanwhile, residential sales dropped 17%. Any story you tell about China, with its population of 1.4 billion and an economy that has more than doubled over the last decade, will always involve big numbers, scary numbers. There was, for example, a collective shudder in September when the debt woes of one of the country's biggest real estate developers, China Evergrande, climbed to $305 billion as a result of years of aggressive expansion. But that was just the tip of the iceberg. Now it has swiftly become Beijing's biggest corporate headache as it wrestles with debts of more than $300 billion, and the fate of the country's second biggest property developer is keeping global markets on tenterhooks. The total combined debt of China's major property developers is now estimated at more than $5 trillion, a big and enough scary number. Welcome back to the world of China. Give this video a big thumbs up and don't forget to subscribe to the channel, it's free. So let's move on. Life used to be good for Jerry Tang, who left his rural hometown in 2014 to become a real estate agent in Shenzhen, China's tech megacity and one of the world's hottest property markets. Just a few years ago, Tang could make up to 50,000 yuan or $7,800 in a good month selling apartments. Last year, he was making around 15,000 yuan a month, but this year that's fallen to about 5,000 yuan and mostly comes from the commission on rentals. According to experts and officials, China's real estate and property market crashes are combined with some serious issues. It can cause serious damage if the government doesn't take a proper step to control this chaotic situation. They fear it can end up affecting the global market and create some serious crisis. Economists say the property sector is the largest contributor to China's gross domestic product or GDP, accounting for more than a quarter when related industries are included. A vast ecosystem of suppliers and service providers have flourished around giant property developers, and real estate has played a crucial role in creating jobs and generating cash for local governments. Land sales in China account for a third of their revenues, which stood at 27.3 trillion yuan or $4.3 trillion in 2020, according to Japanese bank Nomura. Property accounts for 40% of the assets owned by Chinese households, according to Macquarie, raising concerns that if the bubble bursts, consumers would feel less wealthy and turn more thrifty, which would hit other sectors of the economy. China's property sector is the biggest question mark over the economy because of its huge scale. More than 900 million square meters of apartments are constructed each year, official data show. That investment plus the output of related sectors like steel and cement production accounts for anything between 20% and 25% of China's GDP, economists estimate. Any slowdown or an outright decline in real estate development would leave a gap in the economy that expansion in no other sector could easily fill. China has about 65 million empty homes, which is equal to the total number of households in France and the United Kingdom combined, due to a massive building boom and wild speculation. Betting on sustained growth, a huge proportion of China's 1.4 billion people, some estimates say about 70%, have money tied up in the residential property. According to the Chinese central bank, 93.6% of urban households owned homes last year, one of the highest rates in the world. The real estate market has continued to expand because investors, developers, and home buyers have generally believed that the sector is too crucial to the economy for the government to allow any significant correction. Further, China's property sector is heavily reliant on credit, and many developers are struggling under the weight of debt. As of the end of the second quarter, Chinese developers owed 33.5 trillion yuan or $5 trillion, or a third of the country's GDP, up more than twofold from 2015 according to Nomura. Sector's exceptional debt is roughly equivalent to the GDP of Japan, the world's third largest economy. Bonds worth $92.3 billion issued by Chinese developers are due in the next year, Refinitiv data shows. Bond defaults have jumped in recent quarters, from 5.5 billion yuan in the last quarter of 2020 to 21.5 billion as of mid-August. And the most responsible for this crisis, Beijing's biggest corporate headache, Evergrande. Founded in 1996, Evergrande's debt of more than $300 billion is roughly equal to the GDP of South Africa and bigger than Finland's. The developer has more than 1,300 real estate projects in over 280 Chinese cities. Now the world's most indebted developer, Evergrande has $19 billion worth of bonds on international capital markets. Evergrande is just the tip of the iceberg though. Developers have to repay around $92 billion in the next year, and analysts at S&P have estimated that more than a third could experience difficulties meeting those debts. Worries about Chinese real estate developers' high debt levels have rattled investors despite signs that property giant China Evergrande may be making progress in resolving its debt problems. It's an indication of further pain to come in China's property market, according to analysts. Since late summer, global investors have watched for Evergrande's ability to stave off official default and are concerned about whether the fallout might spread to the rest of China's real estate industry. Other major developers have also reported liquidity problems in the last several days. Chinese property stocks trading in Hong Kong mostly fell last week, but Evergrande was among the least affected and lost about 1.3% for the week. On the debt front, the market iBoxx index for China real estate high-yield bonds fell 11.5% last week, according to IHS Markit. Central government officials have sought to reassure markets and said in the last few weeks that Evergrande is an isolated case and the real estate industry overall is fine. Evergrande avoided official default at the 11th hour in late October and began to announce progress on its construction projects. The property developer said Wednesday it had completed project deliveries involving 57,462 apartment owners from July to October. However, the pace of deliveries has generally slowed down month-on-month. Deliveries covered 39 projects and 7,568 apartment owners in October, down from 48 projects and 7,808 owners in September, the company said. Evergrande faced another deadline last Saturday to repay bond investors. The company was the second largest Chinese developer by sales last year, but fell to fourth this year as of the third quarter, according to industry data site China Index Academy. One of the Evergrande officials said, as for the implications for the real estate industry and China's economy, the risk is limited because home buyers won't likely want to give up properties or mortgages they've already paid for. Since most apartments in China are sold ahead of completion, a major challenge for cash-strapped developers is to finish construction and deliver properties to buyers. While Beijing has a lot of control over the housing market, it's still possible the slowdown has self-reinforcing dynamics that could be hard for authorities to control, leading to an even sharper downturn than the more pessimistic forecasts. For example, Chinese households tend to avoid property purchases when prices are falling, which can lead to lower sales and more price declines. If Beijing is serious about resolving imbalances in the property market, it would require a multi-year slowdown in construction activity, which will certainly slow the economy given the property sector's weight. A lot still depends on what Beijing does in the next couple of months, said Logan Wright of Rhodium Group. It remains to be seen whether Beijing will allow Evergrande or any other large developer to fail. Most observers expect it to be a controlled demolition. In other words, restructured in an orderly manner and debts distributed via state-owned banks and institutions. Containing the impact of falling house prices in the wake of such restructuring and the introduction of a property tax could be more difficult. Lower prices might be good for some people, not yet on the property ladder. But with more than 90% of the urban population owning property and 40% of household wealth tied up in property, any disorderly collapse in values could trigger social unrest such as that seen during past downturns. Well, that's all for today. Thanks for watching this video. If you have enjoyed this video, then give this video a big thumbs up and subscribe to this channel. Watch more about Evergrande debt crisis. The link is in the description below.